Welcome everyone to our continued monthly series. I really enjoy these calls. We've been getting such positive feedback on, not only the guidelines, but being able to create more business. And so today on our monthly call, we'll be talking about how we qualify more, close faster, unlock the power of our bank statement program with our smart self. There's just a ton of clients out there with stacks of tax returns or more than one business. And so we just hope to kind of share some insights. So I have some great people on the call and would love to cover, obviously, myself, Don Chiesa. I'm the Vice President, Division Manager, overseeing all things also non-QM here at Newrez. I'm joined by the great Claire Kafori, our Business Development Manager. Welcome, Claire. And then obviously working in the background, who's critical in everything we roll out that's non-QM related. Jevon Stafiri, he's our VP of not only underwriting, but all things operational for non-QM. So I'm hoping to jump in quickly and talk about when income and tax strategy really don't align. And so I'm going to turn it over to Claire.
Yeah, thanks, Don. And thank you everyone for joining today. So I'm excited to get into the why. Why for choosing the bank statement programs for self-employed borrowers. Our program, Smart Self, is focused on income and cash flow versus tax strategy. So while tax returns show strategy, we know that bank statements show reality. Self-employed borrowers could be incentivized to minimize taxable income. They're utilizing legal tax deductions. There's depreciation, write-offs, the reinvestment, entity structuring to report the lowest possible net profit to the IRS to reduce their tax bill. And while this saves money on their taxes, we know it often results in lower income figures on their tax returns. So that just makes it harder to qualify for conventional mortgages. Bank statements, on the other hand, capture the actual money coming in. So they capture growing businesses better than using a 2-year average on tax returns. So we say here, like many self-employed businesses, they're scaling post-COVID. We're over that period, adding new revenue channels, just experiencing recent growth. Looking at a 2-year average often undervalues the current income. So if you're struggling when it comes to income tax and you need options, if the traditional route of tax returns aren't working, bank statements are the solution. You can use personal checking, business checking. We're looking at 12 or 24 months, and we're looking at the deposits, cash flow with bank statement income.
I agree, Claire. Let's talk about some of the key considerations because not only is it about increased income, but speed. So
Yeah, no. Did you know that a third of all self-employment activity comes from owners running multiple businesses? The thought of having to gather and upload those stacks of pages just isn't a happy one for anybody. With our Smart Self, our bank statement loan, there's no need to reconcile multiple returns or chase K1s. Cash flow's underwritten. It's not entity noise caused by accounting numbers, just on the tax returns. Another great point with Smart Self is you can avoid any extension season delays since receiving regular statements are consistent. If you ever get those clients, that have stacks of tax returns because owning more than one business, so both you and your client don't want to deal with calculating that income and loss with them. With Smart Self, you don't have to deal with it. So avoid the documentation fatigue, dealing with the stacks of the tax returns on full doc loans, which often we know leads to missing pages, um, more conditions, K1 delays, and bank statements just simplify documents and they make approvals faster.
yeah, I know we're going to jump in. There's just so many different things, Claire, that can slow down or hurt your approval when you're having self-employed borrowers. Because, right, like you just said, multiple tax returns at any given time, any one it can be under extension. And so we're going to jump into kind of how we do some things. But I did want to call out there is a chat function or Q&A function. Q&A is easier because everybody, we can answer them to you. So again, if you don't see the Q&A at the bottom, click on the More tab and drop in any of your questions as we're going over our guidelines because we want to make sure we can help you capture more business. So I'll go ahead and jump right into us doing pre-approvals. Claire?
Yeah, thanks, Dan. Thanks for pointing out the Q&A. Good point. So why choose Smart Cell? So we talked about, obviously if you don't have these tons of documents to submit, it's cleaner, right? It's faster, cleaner documentation review, keeps the loans moving. We pre-approve the income up front. So Newrez, our underwriters, reviews the bank statements before submission. So you just have to log into the system. We have a screenshot here on the right. Use the resources tab. You click on it. You get the drop down menu, and then there's an option for self-employment income request. So then you attach everything that you have for us to review, give a little synopsis of the business, and then submit it to our non-QM underwriters. And then we'll tell you what to use for your borrower. You'll know upfront what to use. And we know especially when you're working with purchases and you have realtors, they want to know if they can pre-qual their buyer up front, and you'll know if you can pre-qual your client up front. So a big benefit there. And then streamline uploading. So we have an updated, simplified doc upload process through our Smart Series portal.
No, I agree, Claire, because that's the key to structuring a deal and trying to figure out how much it all starts with income. And so without having to upload an actual application, being able to get pre-approval and knowing you can submit those with your docs just makes your closing so much faster. So appreciate all that, Claire. Let's kind of jump into some of the key features that separate us from, a regular loan.
Yeah, perfect. So, before I jump into the key features, are the different terms we offer too. We have a 30-year fixed, which includes a 30-year and a 40-year interest only options. We also have ARMs, including interest only, qualifies on a fully amortized payment. So lots of options. But let's look at the column starting on the left. So we offer financing for U.S. citizens, permanent, non-permanent residents. We allow for non-arm's length transactions. And a big win at the bottom left is if the LTV is less than 80%, 100% of our down payment funds can come from a gift. And then if LTVs are greater, we just need 5% of the own funds and the rest can come from
I
a
think
gift.
that
So a
one's a
big
big
win.
one, Claire, because it's not only for down payment, but our reserves. If it's under 80%, all of that can be done through a gift. So nice
Yeah,
little
it's
feature and
awesome.
win.
That's awesome. All right, moving on to the orange column relating to income here. Our max DTI is 50. However, with compensating factors, an exception can be submitted to allow for a DTI up to 55%. The second orange box is asset depletion, and we allow for crypto. So if we have leftover eligible personal assets, we can get additional income with asset depletion on primary and second homes. Last month, our webinar focused on using crypto as an eligible source for income. It can be utilized either at 50 or 90%, just based on the type. And then co-borrowers, if they're added, they can go full DAC. So whatever works best, they don't have to stick with a bank statement loan as well. So they can use full DAC. On our third column, we do allow 1 times 30 in the last 12 months. Of course, you need to be current at close, and we allow for first-time home buyers on primary residences to 1.5 million. You need on-time payments for 12 months, and they can be rent-free. So you just want to see all regs for details there. And then last but not least, our column to the right, we offer temp buy downs, different options we have a 1-0 buy down all the way to 3-2-1 available on purchases with primary and second homes. We have financing available on warrantable and non-warrantable condos, condotels. We're going to get into a little bit more detail on an upcoming slide with that. And then last but not least, the self-employed borrower must be 25% owner, and then 51% of the income used must be from his or her overall self-employed income. So just an important note there.
Yeah, I think there's just some of the questions I'm seeing pop up, Claire, as we jump into more of the guidelines is differences between 12 and 24. We don't have any real LTV or guideline restrictions. It's really just a pricing play if you can get more bank statements. And Obviously we're going to try to answer a lot of the questions in the chat, but always feel free to reach out to your AE, as our AEs are well versed in all of our guidelines when it comes to, eligible gift funds and what donors and all those other questions that I see that we're rolling in and answering through the chat. But
Right.
great commentary. Go ahead.
All right, perfect. So let's get into a little bit about the different structures. So Smart Self lets self-employed borrowers verify income with alternative documentation, helping them qualify for more income without traditional requirements. So we're going to start with the chart to the right, reviewing the four options and review some of the highlights. So number one, bank statements. That's what we've been talking about. The most common is using the 12 months personal business checking. And as we just talked about, 24 months is also an option. There's a standard expense factor of 50%. It could be reduced as low as 15% with a CPA tax preparer letter. You're going to want to reach out to your AE. They can provide you with a template. There's some verbiage on there. Will just help you flow smoothly through the process. We also have a 1099. So, like your contractor, your real estate agent, your driver, Uber, have to pay their own taxes, just like self-employed, but they do get a year-to-date pay stub. So we need a year-to-date pay stub, the most recent 1099 form, and then the expense factor here has to be at 10%. Profit and loss statement, number three. So that we need the most recent 12 months year to date signed by a CPA tax preparer. And then loans less than 1 million or less, there's no supporting bank statements required. So a big win there, less documentation. If we do go above 1 million, we do need to provide bank statements. Last option on here is for those self-employed for at least a year. This is common we see some examples like a salesperson, and then they start up their own business, or someone in an executive role and then moves to their own business. So someone going from employed, W-2 to self-employed. So they must be majority owner greater than 50%. We need 5 years W-2 employment in the same industry, most recent 12-month bank statements. This is available as an option on primary and second homes, purchase rate and term, and then 700 plus credit score, 75% max LTV, and then we can go up to $2 million in a loan amount. It's a big win there.
Yep.
We do allow for, different additional sources of income are allowed. So some traditional income is allowed on the loan if you need more. Again, we're going to submit the statements, big benefit to calculate the income prior to submission. And then if we have a non-occupying co-borrower and we need additional income, we can add them. Just the LTVs, which we're going to review on the next screen, are reduced by 5% on all options.
And I know I continue to kind of monitor the chat a little bit, Claire, and so we're covering so much here. But some key things that I wanted to kind of just highlight here is there's just a lot of choices, right? Not everybody's going to show up in the same form with bank statements. If you are doing bank statements again, just I reiterate, reach out to your AE. We have a template for the CPAs that make it really easy on them. So we don't have to go back and forth on, just telling us ownership percentage and how long they've been self-employed, so we can move forward. And then lastly, that additional source of income, as long as the self-employed borrower that we're using the bank statement at 51% of their income is coming from the bank statements, they can use these other sources like asset depletion or adding co-borrowers that are completely full doc on their income. It's just the borrower that's using the bank statements, 51% of their income needs to come from there. So again, a lot of great choices, seeing some of those questions coming up. So wanted to address those while we were chatting on the call.
Oh, thank you.
Alrighty. So I wasn't sure. Go ahead on the LTs. Jevin, did you start to say something or no? Okay. Back to you, Claire.
All right, thank you. So there's a lot on here, and I'm not going to review all the different scenarios, but wanted to show you what the limits are we offer on primary, second home, investment properties. So just a couple here. Loan amounts start at a minimum of 100,000, maximum up to $3.5 million. So uh, there's a lot of flexibility here. So if we look at the primary just up front, we can go up to 3.5 million. The max LTV is 70%, and we need a minimum of 740 credit score. If your client has a 640 credit score, let's say on a purchase rate and term, or a 645, you can um, go up to $1 million and have max LTV up to 80% of that loan. On an investment property, our credit score goes all the way down to 660, and you can go up to $1 million with our max LTV of 60%. So if you, there's a lot of options here. If we can submit exceptions up front if you're close to hitting a guideline. The one thing is, I'll just caution against any layered exceptions, but we do offer a lot of flexibility here.
Yeah,
Non-QM, it's manually underwritten, so there's no, AUS, there's no PMI, so a lot of great benefits.
and I just keep going to the things I see in the chat. Like reach out to us, supply your bank statements up front. We want to try to make sure that you have clarity around it. I'm seeing questions on should I use bank business or personal first? Like send us your business first. Like I said, our team is well qualified and can turn around quickly the amount of income. And then once you submit the loan, just make sure that you're providing us the compensating factor as well. If you want to get an exemption, we're just looking for some other strength in the file that allows us to go over what's stated in the guidelines. But about, especially on the bank statement programs, I'd put a number at around 30% that are being done outside the box. So that's just part of doing business in the non-QM space. So again, hopefully a lot of these dollar amounts with the 3.5 million being our max, we're going to make some exceptions. We'll go up to that amount, but that's our max. Hopefully, you're seeing a lot of aggressive programs that would allow you to capture more business. Again, this competes very well with some of the jumbo programs out there, but can close a lot faster and easier than some of the stuff that you have to go through on the jumbo side.
No, that's right, Don. Thank you. So just a little bit here. We talked about condos. We're going to get a little bit more detail. Um, this is just, non-warrantable. This is just to show you here that it isn't everything outside of warrantable. It's expanded, and we do offer both here on our Smart Series. We will also pre-approve condos. You just need to reach out to our project review team. You see the condo team email there at the bottom, listed at the bottom. And also, if you'd like to learn more about condos, we're having a webinar planned in June. So stay tuned for that.
Yes, again, agree. We offer, just to reiterate, both warrantable and non-warrantable, as well as condo tells on all of our Smart Series programs, especially our bank statement program. So we welcome you to submit as many of those to us as well. We have our condo team looking to approve anything upfront as well.
Yeah, thanks. And just recently, we know that our agencies updated some guides. They released some wins for condo financing. So we'll just review a couple of them here that impact our Smart Series non-QM as well. So insurance relief was effective immediately. So we now allow for the actual cash value, ACV, roof coverage now allowed. This removes a major bottleneck versus replacement cost. Hundreds of previously ineligible buildings may now qualify. We also had a deductible cap, which creates clarity. So per unit master policy deductible is capped at 50,000. This provides a clear standard, eliminates inconsistent lending decisions across the board. And then there is a waiver expansion for small buildings. So projects with 5 to 10 units can bypass the full project review when eligible. Then this reduces friction for buyers, especially in smaller communities. So now I'm going to turn it back over to Don for where to find Smart Self Business.
Yeah, I love this part of this webinar because not only are we talking about the guidelines, and I'm seeing a lot of questions pop into the chat. So thanks for dropping those in there. But I don't see this with a lot of other webinars is they want to tell you always about kind of how the program works, but when you walk away, where do you find the business? And so I don't think I'm going to cover anything earth-shattering. A lot of these practices you guys may already be doing, but for those that are new to the non-QM business, just trying to give you some places that you can look. So my first one that I wanted to cover is just where do you find good referral sources for this business? If you want ongoing business that you can attract, we always think your top tier, high conversion, low fallout is going to come from CPAs, enrolled agents, and tax preparers. And so you may be asking yourself, well, how do I get these types of referrals? One of the kind of cheat codes that I like to provide is if you're going to help out any of your borrowers, especially on some of these programs, you're going to be asking for CPA letters. Get permission from your client to reach out to their CPAs on their behalf. Get some type of letter from them, have them introduce you to the CPA, and then reach out and keep them informed of the transaction as much as you are the client with permission because you want to turn all the CPAs that you're dealing with into referral sources because as I'm sharing with you, this is one of your best sources because right, they see the problem first. They see lower taxable income or multiple extensions, right? We're talking about these clients that have multiple tax returns. At any given time, one of them can be on an extension. They already have, explained to the clients why tax returns don't tell the whole story, right? Their job is to help protect them against tax strategy, right? How do I minimize your tax if I'm a good CPA? Well, in mortgages, you want to maximize the income you're qualifying with. And so that's why we have these great bank statement programs. Again, CPA specialize in small business owners that are perfect for this product. They talk to real estate investors all the time, high income self employed professionals. Again, these large firms that are filling up these large amount of tax extensions. So these are just great referral partners. And so some talking points, right? We help your clients qualify using cash flow, not taxable income, without doing the tax strategy you built. Or we don't ask for amended returns, CPA letters explaining write-offs. We have programs like our self program, bank statement programs that allow you to qualify clients while you're trying to solve their tax strategy. So again, high conversions, top source there. So figure out a way to tap into those. And then here's another one that we believe is a little bit underrated, still high value, is those business and commercial bankers, right? They see the deposit behavior daily. They know clients. But I will tell you, especially like in markets like California, right? Many of these commercial banks or business banks don't offer any residential lending. And they have a clear picture, right? Who do you want to target at these commercial or business banks? Go to the relationship manager, go to the Small Business Association lending group, talk to their treasury management officers. Again, some of the possible taglines when your clients' deposits are strong, but their tax returns kill the deal, send them to us. We underwrite the deposits you already trust, right? These people are looking at cash flow every day. If you go and talk to a business person, they're just looking at cash flow of businesses all day. So they know business returns, right? We can do business bank statements. They know the clients that are looking for homes and looking for referrals. Alrighty, I'll close it out with kind of those people that may be on the call that are also direct to borrower sourcing, right? That's every LO that's out there. And so who do you want to try to target? One, and we chatted about it a little bit with Claire, is your gig workers, your platform workers, right? They are supplementing income and trying to find it. Again, this may not be, you would have your primary borrowers and then you'd have supplementals, but you got people that are maybe not doing a DSCR program, but are wanting to do an Airbnb. So they're cash flowing properties. Um, Also, tips to find these people. Look for them in these social media groups, right? There's always those rental companies or people that are out there trying to freelance to get business. You can find them. Or you can drop some Google ads or YouTube explainer videos telling them that you do self employed mortgages, you do low income on tax returns, you do 1099 borrowers. Figure out ways to talk about relevant points that you think these groups will recognize. Again, talking points. If your income hits the bank, but not your tax return, we may have a product for you, right? These are great lines. Side income counts when it's consistent. So again, more ways to look for business. So lastly, you know, target those people with multiple businesses, and you guys know how to find them, whether they're through CPAs, but if you're wanting to move online and self-source them, look for LinkedIn people that have multiple businesses, right? They have present on multiple lines of companies. Look for industry-specific trade groups. Join your local chamber. You're probably already a member at your local chamber, and you're asking about, groups where you have multiple people or multiple businesses. Real estate investor meetups. Again, pain points that you're trying to solve. Income that's split across multiple sources, right? Think about it. I have a good friend. He's in a business that has multiple sources of income. And we were just chatting with him the other day. He's trying to buy a second home. And he's like, Don, how do you want me to deliver my tax returns to you? They're 4 inches thick. And it's like, you probably don't want to do that. You probably want to give me your bank statements and see if we can qualify you that way because the pricing is very competitive and we can probably close you in a much faster timeline. So again, a final note, when your client's deposits are strong, but the tax returns kill the deal, send them to us. We underwrite the deposits you already trust. So again, hopefully you guys found value in the guidelines. Hopefully you found value in some of the ways to source this business. Claire, any final words? Because I know, just another great time chatting with our many different business relationships out there.
Yeah, no, thank you. I loved, where to find the business and what you went through and agree. Just thank you. Thanks everybody for your time. We appreciate you.
Yeah. So reach out to your AE, reach out to us directly. We'd be glad to give you any more information on any questions we weren't able to answer. We do publish this. Usually it takes us about 3 to 4 weeks to get out a published recorded event. But if you want a copy of anything, your AE has access to all this information. Please reach out to them. Thanks again, everyone.